Hello everyone, Investrance research is back again. Today we are doing financial markets. Most of you might be confused at why we are doing financial markets when our entire focus is stock market, right? As a part of Pro Trader series, where we have planned to make you professional trader, we want you to understand the entire ball game of money. How where does the money come from and how the money is getting supplied in the economy, and where all does your money go when you earn a salary and everything. So what are the other instruments that are available in the market, and the main motive for this video is to tell you that where the stock market stands in this financial markets. Okay, so let's begin with the financial markets. So financial market is nothing but you can say the demand and supply of money that is being circulated in the economy or the country. So how does that takes place, and the intermediaries that take part in that supply of money, supply, and also the demand of money becomes the participants for the financial markets. So financial market is nothing but the a thing which supplies all the money in from the individual, from the companies, from the businesses, wherever, who needs money, who doesn't need money, they save their money. So it basically starts from, let me give you a layman example, that when you earn your salary, you are a household saver, you earn 50,000, you plan to save 20,000 per month, so you put it in banks, right? So the bank, how does bank earn money? Bank gives that money to someone else who needs that money. It might be business firm, a person who takes personal loans and other stuff, or a business loan. It can be anything. So bank earns interest from that money, and bank also gives you an interest for keeping that money, because bank is also earning that money. And also stock market becomes a part of those financial markets when company needs to raise money. So it is a we will come to that in a later part of this video. But stock market also is a medium to raise money for businesses, right? So stock market, you can register your company in the form of IPO, and you can put your shares on the exchange, and then you can raise money, so that money also goes to the business firms. So indirectly, this entire financial market is just the supply of money. So but where does bank get their money from? So the entire right of printing the money is with RBI, Reserve Bank of India. So there are certain rates, like you might have heard about the repo rates, CRR, SLR, right? Reverse repo rate. The four major rates, the only instruments that government or RBI has to to maintain the supply of money in the economy. So you can't keep on printing notes and supplying it into the economy, because it can devalue. You can't decrease so much supply of money, because it will lead to inflation. So always the government needs to maintain that money supply in the economy. That's the later part of the story. I might make a video for the money supply thing, but today we are doing financial markets. So RBI prints the money. Okay, RBI is the banker's bank. Okay, it is, you can say, father bank. Okay, ICICI, SBI, or any other SDFC takes money from RBI. Okay, so the interest rate for that particular money is less. That if you say that today, if you borrow as an individual, if you borrow money from bank, say for a home loan, it will charge you 8.5%. So if bank, say ICICI or SBI, borrows money from RBI, they will charge them 6.5% rate. So these rates are called repo rates and reverse repo rates. With the if bank keeps their money to RBI, it is called reverse repo rate, the rate of interest which RBI will be paying them. And if they are taking money from RBI, it will be repo rate, which banks has to pay them. And then banks supply that money in the economy. So that money is given to the business firms, to the home loans individuals for personal loans, and other businesses who earn money. Means the entire money is being circulated all the time in the economy around. Electronically, you can say trillions of dollars or trillions of rupees is circulated every single day. So so financial markets maintain that supply of money. Okay, so let's see the relationship between the lenders and the borrowers. As I said, that there will be lenders that can be individual or companies that are taking money. Okay, then there are financial intermediaries like banks, insurance company, pension fund, mutual funds, financial markets, the stock exchange, money market, bond market, foreign exchange market, whatever is there, there the financial markets are. This is where stock market uh, comes into picture. This is the place. And then there are borrowers, so individual companies, government, municipalities, anybody can borrow the money. So this is the flow of money. So I'm categorizing it broadly, but please understand, you can just imagine the example I'm telling you. Had already told you about an individual earning money and keeping it in bank as a safe, and then that money goes. So similarly, the entire flow of money takes place in this format. So there will be individual and companies. The financial intermediaries help that money supply to the economy, and always borrowers. So it is like supply and demand. Who is supplying? Lenders are supplying that money. Financial intermediaries is just an intermediary, and borrowers are demanding that money. So the entire economy runs on supply and demand. Okay, so this supply and demand is being maintained by financial intermediaries and financial market. Okay, financial markets are basically categorized into two part: money market and capital market. Okay, so what is money market? Money market are again categorized into organized and unorganized. So money market is basically, you know any fund which you are borrowing from, say overnight. If I borrow money, say overnight from with someone, why do I borrow money overnight? Because I need to maintain some, say it's a regulatory requirement. If I'm a bank and there's an SLR. SLR is nothing but statutory liquidity ratio rate, which a bank needs to maintain to safeguard themselves from any disaster that will happen. So that if the bank gets closed, the investor money, the people who are keeping their money should be at least safe, should be maintained as safe, you can say. So 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 that part, I need to, if I'm not maintaining that rate, that will become and regulatory breach for me. So what I do is basically take the money for overnight and give them some rate of interest, you can say. So anything that means even for single night to 1 year comes as an money market instrument. Okay, so bonds, you can say bonds, all the uh, short-term funds comes under money market instruments. So this money market instruments is maintained by some organized sector and some unorganized sector. So organized sector can be RBI, which gives you money. RBI also has the overnight lending scheme with them. So there are development banks, rural banks, foreign banks, state financial corporations. So and there are in unorganized sector, you might have heard about chit funds, broker dealers, traders and friends. So anything that is money, please, the money market can only be categorized at the funds which are for as short as 1 night to 1 year. So those are money market instruments. Please, this is the only difference from money market to capital market. Capital market you can keep on holding. There's a lot of things that differentiate the money market with the capital market. Okay, coming to capital market. So capital market is can be categorized into primary market and secondary market. Secondary market is the place where stock market comes into picture, and the OTC, over the counter. Okay, so primary market of capital market is nothing but the, if you have heard about IPOs, IPOs are nothing but initial public offerings. So these IPOs, you can say if I'm a company, say XYZ company, suppose I'll just take an example. Suppose say ITC, right? Indian Tobacco Company. It's a very good company into FMCG, tobacco, and other products, right? So I have been, say I have a market cap of market revenues, or sorry, my company uses money around 100 crores, right, of capital. but I'm not able to maintain that. And if I want to raise more money or divest my investments, my personal investments, so what do? I list my company into stock exchange. So what that procedure is called? It is called as initial public offering. If you want to further divest your company, it is called further public offering. Okay. So IPOs are basically primary market. It always, whenever the company needs money or divest their funds and release it in the form of shares, comes into primary markets. Okay. So secondary market is nothing but after after this stocks is being listed in the market, after IPO has been say launched, okay, then the shares become available for trading on the exchanges. So what is that? That comes as a part of secondary market. It comes into stock exchanges. Stock exchanges are again becomes an intermediary. Who is the demander? The company is the demander. Who is this supplier? We, as an individual who buy stocks, we supply the money, right? And other OTC is nothing but over the counter. So it is not just so financial markets is not also, you can say, when an intermediary is involved. If not, say I have an agreement of exchanging grains or other products over the counter, that is OTC. So if I exchange the money or any other fungible product, so it also becomes an exchange for me. So that also is categorized under secondary market. So capital market broadly classified into primary market and secondary market, and then into stock market or over the counter. So our main focus further in this Pro Trader series will be stock market. But the entire motive of this video was to tell you that where the stock market stands. Okay. So if you have any queries regarding the financial markets, let me just give you a summarization of this video. So financial markets are nothing basically but an entire channel or a medium to supply the entire money in the economy. So it is done through primary market and secondary market, money market, capital market, you can say. So see, the entire flow chain is the individual who wants to save money, the companies who wants to save money, intermediaries help them to save their money, and intermediary earns by giving that supplying that money to the one who needs that money and earn interest on that. So how this is how intermediaries earn money. Okay, so this is the entire ball game of money, how it is supplied. Who prints the money? That is RBI prints the money. RBI gives it to the banks give it to the individuals. Individuals save their money in the banks, so that money is also given out. So that money's returns come in the form of interest plus principal. So and then comes the stock market. Stock market supplies the money to the businesses list themselves in the stock market through IPOs. Okay, so we as an individual can trade these shares in the secondary market, which has been listed by any company on the exchanges. So this is the entire ball game of financial markets. Please, if you have any queries, please write down to me on investransresearch@gmail.com. Secondly, we on next on breaking down series, we are going to breaking we will be breaking down oil, its entire price fluctuation, how does it matter, where it had came from, all the story will be breaking down. Please stay tuned. Meanwhile, please subscribe to our YouTube channel Investrance Research for more such videos, educational videos, and also please like our Facebook page Investrance Research. And if you have any queries, please write down to me on investransresearch@gmail.com. Thank you from Investrance Research, making investment decisions better. Thank you.